The crypto industry has reached another milestone in its journey toward mainstream acceptance. On 23 May 2024, the Securities and Exchange Commission approved all 8 spot Ethereum ETF.
And the crypto industry is celebrating a new milestone after the SEC paved the way for the eventual launch of the first exchange-traded fund investing directly in the Ether token.
These ETFs based on the price of Ether have been approved for the NASDAQ, the CBOE, and the New York Stock Exchange.
The decision came 4 months after the regulatory approved spot Bitcoin ETF on 10 January. But the burning question that arises here is, why did it take so long for Ethereum ETF to get the green light? Well, join us as we explore the fascinating world of spot Ethereum ETF, how they differ from Bitcoin ETF, and uncover their potential impact on the crypto landscape. First, let's understand what a spot Ethereum ETF is. Exchange-traded funds, or ETF, typically track a specific index and are traded on exchanges. Investing in an ETF gives investors access to a basket of assets that can be bought and sold during market hours, diversifying their portfolio and lowering risk. Investors can enter or exit positions anytime during the trading day without interacting directly with cryptocurrency exchanges, making it a convenient option for traditional market participants seeking exposure to Ether. Meanwhile, the first player to step into the race for a spot Ethereum ETF was VanEck, who filed its application on 6 September 2023, followed closely by ARK21 shares and Hashdex in the same month. Later won by 1 other applicants, including Grayscale, BlackRock, Invesco Galaxy, Fidelity, and Franklin Templeton also filed for spot Ethereum ETF. VanEck initially faced a delay in its spot Ethereum ETF application when the SEC announced it would take until May 23, 2024 to decide and sought public comments. The SEC also postponed decisions on applications from major institutions like BlackRock and Fidelity. As the SEC continued to delay, everything came down to May 24, 2024, marking the 240-day deadline for the SEC to decide on the proposals from VanEck and ARK21 shares. Many in the crypto community believe that the Ethereum ETF will be approved by May, as indicated by recent signs. Just a few days ago, the US SEC urged issuers of spot Ethereum ETF to update their 19bits4 filings promptly. This request had a significant impact on the market, leading Ether's price to surge by as much as 18% on 20th May alone. Meanwhile, the SEC's sudden push has surprised many, with analysts speculating that it could be influenced by major players like BlackRock or political pressure on the SEC due to the ongoing 2024 U.S. presidential election. As the deadline approaches for VanEck's application on May 23, and ARK21 shares on May 24, anticipation mounts within the crypto community. Finally, on May 24, the SEC gave the green light to major players like Grayscale, Hashdex, BlackRock issuers, VanEck, ARK21 shares, Invesco Galaxy, Fidelity, and Franklin Templeton. These ETF will be listed on major exchanges such as NASDAQ, CBOE, and NYSE, bringing a new wave of legitimacy to the crypto market. Even though the law change is being granted for the trade-off spot Ether ETF, trading will not immediately begin. Issuers first need the SEC to approve individual ETF registration statements, with details of investor disclosures. Meanwhile, after the approval of the Ethereum ETF, the looming question arises in the mind of many investors and traders that how Ethereum ETF differ from Bitcoin ETF. Ethereum is both a cryptocurrency, Ether, and a protocol network. It highlights its programmatic, smart contract capabilities as much as its cryptocurrency. Notably, Bitcoin, however, does not offer programmable smart contract capabilities. The Ethereum network can hold Ether in an escrow wallet between counterparties until a condition is met. Additionally, Ethereum uses a different consensus algorithm for settlement, known as proof of stake, whereas Bitcoin uses proof of work, a brute force computation of a complex cryptographic puzzle. One of the most exciting aspects of the new spot Ethereum ETF is the potential for staking. By staking their Ether, investors can earn transaction fees, much like receiving dividends from stocks. This not only incentivizes holding Ether, but also enhances the security and efficiency of the Ethereum network. With Bitcoin ETF already approved and now Ethereum ETF joining the ranks, the question arises, who's next in line? The crypto community is buzzing with speculation. Could be Ripple or Solana be the next digital assets to receive ETF approval? The approval of spot Ethereum ETF is more than just a regulatory milestone. It's a signal of the growing maturity and acceptance of cryptocurrency in mainstream finance. So stay tuned as we continue to explore the unfolding landscape of digital finance.